Welcome, everybody. It is 3 o'clock here on Thursday. Today is January 23rd. Getting towards the end of the month, one more week before the Super Bowl, and hope everyone's doing well. Thank you for being here. It is our weekly coaching, and I'm really looking forward to getting started. We're seeing some downward pressure in the market, and we've really needed some. But every time we've had some downward pressure, we've met buyers stepping in to keep this market propped up. So let's see what happens this time. As a reminder, I'm not here as a licensed broker. I'm here just to give you guys educational information. I'm not here to give you trading advice or recommendations. Okay, I am not licensed. I don't want to be licensed. And I like to keep it that way. Any questions, of course, you can get in touch with me, Rich, Mike at Affinity Trading, Ralph at Affinity, or Omega. And if there's anything I can do to help, please let me know. And, of course, if you are on your trial, again, please remind yourself, just a reminder to get signed up. And not take advantage of being in here for more than a few weeks. I definitely like to have you in, but that's enough said. Let me just fix one thing. I can get rid of that as well. Clean this up a little bit more. Excellent. And let's bring up the account. I also want to bring up our weekly watch list. You can see that I have my one stock that we're doing pretty darn well on. Gilead is actually 0 for the day, which is pretty good because it was down a bit. So I am kind of excited that it's holding up pretty well in this downward market. So let's take a look at GILD. It's one of the stocks in our account. You can see it had a really beautiful explosion here. Little bullish engulfing pattern right there. It started to take off, started to really give a nice little pop, and broke out really nicely here, and really looking forward to seeing this continue. You had this kind of confirmed, evening star up here, and it looks like it's actually, let's see, this might be the bearish sign, but this might work out pretty well. I'm going to stay in it. Because it continues to look good, but it had a nice ascending triangle. It's time to move our stop loss up, so let me get that done. And let's just keep it going, right? I mean, what do you guys think? Would you get out of this trade? Just out of curiosity, that we had a $10 target on it, and it hit almost $10. Cool. Awesome. Good job, Joe. Caught the breakout yesterday and sold yesterday. Good job. It's almost hit our target. What I want to do is I want to tighten up the stop here. I want to bring it up. One person said stop loss. Yeah. The fact that this thing is doing as well as it is today with a bad day or down, I don't want to say a bad day, but a down day in the market, is encouraging to me. I'm seeing the spiders kind of going in a sideways direction. And so that's an interesting piece as well. Maybe we are getting a little bit of a sideways trend and or downward push of the market. But only time will tell. So what we want to do is we want to go over to our Gilead trade here, right-click on it, and say create a closing order. All right, and then I'm going to create a good till canceled stop that is going to essentially get me out if this thing gets down below about 81.40, because that'll be below the high of this gap, and it'll be below the low of the trading, not the low of the day today, but it looks like it's going to want to trade, above this 81.60 range. Okay. So 81.40, let me go back over here and set my stop loss, protect profit. Let's see. Oh, there's 15 days left in this one. Hold on a second. That kind of changes a few things. My apologies. I have 15 days left in this. Let's take a look here. What if I was to roll this sucker out to like the February option and then move up a strike to about the 80? That would be a $300 credit per contract. Okay, I like that idea better. So let me scratch my idea of moving the stop loss up. Bill, we will be putting a stop loss in, but because the option only has 15 days left in it, time decay is going to start to ramp up on us. So there's no reason to kind of go into the weekend and hold this thing and have time decay go against us. I'm going to send and confirm this sucker and get this filled. And what I'm going to do, folks, is I'm just going to roll my option from 1 week to the next for 2 weeks out to get to the February monthly option and give me more time. It's going to cost me pretty much nothing, just the trade, but I'm going to bring in $1,600 of credit. So I'm going to dump $1,600 in my account right now. Thank you very much. Thank you very much. Cancel, replace the order. Let's get filled on a market just so we can get it done. I do work them a little bit better when I'm not in the time crunch. Now I'm going to go over here and I'm going to create my stop loss. All right, so what I've done, folks, is I'm going to create a stop loss based off this new trade. And if I went too fast, let me know. But this allows me to roll the option, collect profit, and if this does go against me, I've got a stop loss in place, which is what I was going to do anyway. At or below, what I say, 81.40. And if anyone didn't get that, let me know. But this is how I really am able to successfully stay in trades like the FedExes and the Amexes over the last couple of months. Not right now, I'm not in those. Send, confirm, good to canceled, stop. Okay, sell 5 of these suckers when the stock gets at or below 81.40. Send. All right, now I've got my protective stop in there. All right, so we're doing pretty darn well. I mean, clearly, I didn't point it out, but I hope you did see we were up really nicely on that trade. So now it's going to show 0 because now we're, the open is no longer, obviously we just sold that. So you're using the mark on both options and the yes, Joe, I wanted to get filled right away. Usually I would wait and get a limit order, but I only have you guys for another 50 minutes. And I don't want to play around with getting that limit order and then waiting to get the stop loss put in. And, I've only got you guys for a little bit. The original strike, folks, is right up here. I had the February 1, February week 1, 75 call, and I rolled it up to the February monthly option to the 80 call, Mike. And, these are all private, so everything you send is always private, and I will then replay it back so you can see it. So you can always send me something. No one else is going to see it but me. So I'm just replying to Joe's and Michael's so you can see those. Oh, no problem. Now, what I've also started to do, which is going to incorporate into a little bit of the watch list, is I started to get a little more sideways with these trades. The Amazon is a sideways trade. It's up doing really well. This is on 5 contracts. So if you did this trade, you'd be basically up, $200. You guys don't have the ability to unmute. There's too many people in here to unmute everybody. And then if someone has a bad mic or doesn't have a headset, and they just have the microphone off their computer, you get all the background noise. You can't hear audio. Can everyone else hear me okay? Okay, yeah. Everyone can hear me. Oops, H-E-A-R, me. I'm just typing that in. Dan is having problems. Dan, check your volume. Let's send privately. Okay. So I'm a big fan. My favorite trades, folks, are the delta neutral, the high theta positions that collect premium. But the market was always giving me something really nice, which was cheap options, and I couldn't ignore it. So I've been trading a ton of it and doing very well with these Gilead type trades and stuff like that. But you can see these Amazon trades are the same trade. They are sideways diagonal. Okay. Jason, the trade was we are selling a call against another call, expecting it to go sideways. Let's see. So and now we also have to roll this thing. Because we have 1 day, left in the in this option, okay, and it's the 397.50, so we are in the money. So let me roll this sucker, create a rolling order, and I want to create more premium. Okay, the stock has gone a little bit higher than I wanted it to. You can see Amazon. Hold on. Amazon's got earnings coming up here on the 30th. So let me see something here. If I trade this sucker, what am I going to be doing to myself here? Let me see. The 30th is next Thursday. All right, so you know what? Instead of rolling this sucker, we're just going to get the heck out completely, because next Thursday is the earnings, and I don't want to partake in this thing during earnings. So I'm going to go over here, and I'm going to get out of this both. I'm going to click. Boom. Let's get that filled and get out. Cancel. I don't want to cancel the thing. I wanted to cancel, replace it. Boom, boom. We've made a pretty good amount of money on it. Let's just get out. Okay, there we go. That's out. Let's take our profit and run, because we do have earnings coming up. This was not a trade to stay in through earnings. So don't, folks, this is something people do all the time. People see the trade, they get into it, and then they change their minds on what they want to happen. And it gets them crushed. Okay, this trade was to make money on the stock going sideways. Here's Amazon. Amazon has been going sideways for the last couple of weeks. We partake in it, made $1,000 for 2 weeks of time. Let me verify how long we've been in this trade. Amazon, let me go back 30 days. So on the 16th to the 23rd, okay? So we put this thing on the 16th, which was last week. Okay, so in 1 week, folks, 1 week, we made $215 per contract times 5 contracts. Okay, so what do you guys think of that? Is that something that's good enough for you guys? You like that? Is that respectable? Or I'm just curious what your guys' expectations are. Is that okay? Yeah? Okay, I got a yes from, all right, because folks, that's $200 a week on one contract. You guys can do that. All right? 5 contracts is what you build up to. So, you know, depending on your account value, you might say, no, I would have done that 10 times, which is totally fine. I totally respect that. But, you know, we took the trade, we profited, let's get out, move on. Our Facebook is doing very well. That's still going to sit there. And the other trade I have on, folks, is this kind of spider trade. All right. It's losing money, but it's only $250. It was a skewed iron condor here, and the stock has started to fall below the area I thought it was going to sit above. Right? You see this 83 right here. Okay, so the upside is not hurting me at all. In fact, it's almost worthless. Okay, the 87.88. That's what I've taken almost full profit on. It's this 83.85, 83.78 that's kind of crushing me a little bit. Yeah, Rick, that's the point. You can't do that with 5 contracts, but you can definitely do that with 1 or 2. And if 2 contracts yielded you 400 and something dollars, that's still a pretty darn good day. Yeah, so then the thought is, what do we do with this spider position? All right, I am taking a bit of a loss here. All right, I can create a rolling order and see if I can get another credit. Okay, so what I could do is increase the amount of share size, which I'm not a big fan of doing. Oh, I'm going to show both. I'm just looking at both sides, Matt. I'm just kind of tweaking at what some things are. Like if I was to, I've got a few more days on this with some time decay left in it. So if I look at the chart of the spiders, there's a reasonable expectation that this thing can get above 83. Okay, so there is some possibility there, and I'm not willing to give up on that trade. But I just want to see what I could do in terms of credit. But yes, I can definitely roll this sucker or get out of it completely. All right, it's only worth 3 cents. All right. Depending on your broker, like Thinkorswim allows me, if I get out of this at 5 cents or less, they don't charge me a commission. All right. Create a rolling order. And if I roll this sucker out, I'm not really getting a lot of premium. So I want to see what is worth for me to go out and get some premium. And I'm really not getting a lot. A 5 cent credit, that's $5. That's $15 in the trade. It's going to cost me, a few bucks to get in the trade. So we're going to leave this alone for right now, and see if I need to lick my wounds with a loss. But I've got some time decay that can work in my favor. And then if tomorrow is a stable day, then I got Saturday and Sunday working in my favor as well. So we're going to leave that alone. Worst case scenario, it's a small loss. It's managed. It's an acceptable loss that I can take in the account. I don't know. I hope that made sense to everybody. Yes, Fibonacci's, the good old Fibonacci. I don't know where you were drawing your lines from, but you could see there was a nice run here recently. So, there's this move from here to here. And so there is that area of support that it bounced off of. So yeah, I'm not wildly bullish, but I'm at least optimistic that the market looks like it wants to stay sideways. So Michael asks a good question. Why different contract sizes 3 and 5? I was more biased to the upside, Mike. So I skewed the trade to the bullish side. If I analyze this trade on the spiders that I have right now, it's more skewed to the upside because I have 5 bullish positions, 3 bearish positions. And so I was kind of taking a little bit of a directional bias there. Bill, yeah, I think it is going to bounce off support. I think you're right. So, that's what that's what I think. So we'll see if that belief happens. My thought process is irrelevant in the market. There's no one going to say, oh, Ralph Michelle thinks this is going to happen. Let it happen. I'm just going to react. I'm pretty much, I don't care what really the market does. I'm not really a bull or a bear. I just react to what the market does. Okay. So let's take a look at some of these stocks in our watch list. Take a look. I know some of these are a little high flyers. Google definitely is in a nice, beautiful, amazing uptrend. To think that Google started this year at 750 and it's now at 1150, it's pretty wild. We do have earnings coming up, so I am I'm not even touching this with a vertical spread, which is the way I would trade it. PCLN. How Priceline is this high? I have no flipping clue, but it is. So it had a nice little break of resistance, and now it's got this little spinning top or day of indecision. Very bullish stock. It's holding up decently on a big bear day in the market. Bogdan, yeah, definitely will look at Visa as well, no problem. The interesting thing about Priceline is that, let me see here, support. Yeah, 680 is below support. Let's get some more strikes. The 670. You can still get a decent amount of money here. I mean, this is a $5 wide strike, and you can get $1.80 for it. That's a nice premium, $1.75, and you don't have to worry about being wrong all the way down to 170. Okay, so that's kind of interesting to me. I like that trade. I do want to write that down on the side here. We'll address it later on PCLN. Okay. Now look, folks, there are reasons you can place this trade even in a small account, because if you have a small account, folks, you're only risking $320 on this trade. All right? So, I mean, really, when you're looking at this, I know it's a gigantic price stock, but you don't have to have even $10,000 in your account to do this. Okay? You need to have $500 in your account to do this. Weekly vertical. Okay. Let me take a look. Google. Thinking that Google is going to bounce. Take a look at the trade here. Yeah, just be cautious, Michael. In a Google trade, you do have earnings coming up. Okay, so just really be cognizant of that earnings coming up next Thursday. So allow that time decay to work out in your favor, but by Monday or Tuesday, just be really cautious. Visa was a question for, expires tomorrow. Cool. There you go then. Visa does look really good. It has earnings coming out as well. So again, I'm not going to be touching it till after earnings. Visa has had looks like just a stellar pre-earnings couple of days here. Broke out of that resistance and looks really healthy. But again, I'll wait till after the earnings are out of the way, Bogdan. Because volatility will definitely take really could really cause you some grief. MasterCard, again, earnings coming out on that as well. They did a split 10-for-1. I think it looks awesome, Joe, but again, I'm going to wait for after earnings. Okay? Bill has a good question as well. This one is, so the pros of doing spreads is use less money. Well, the pros of using spreads, yes, Bill, is you're using less money. You can do it on higher price stocks that are very liquid, getting very good fills because they are very liquid. So that's another positive. The other couple things is your higher probability of being right, because the nice piece about using a spread is that it doesn't have to go up. It just has to go slightly sideways. Okay? So on Priceline, something that most people won't touch with a stock, is that on the PCLN, I'm bullish on Priceline. I don't want to put out the money it's going to cost to buy a call, but I can put out a vertical spread and I can use a lot less money. Okay, I can use a ton less money. I can have the stock go sideways and make me money. I can have it go up and make me money, and I can even have it go down, just stay above the strike price that I sold. And if you're still trying to figure out how to use verticals, I teach a class, through Affinity. I do all my classes through Affinity trading, and right now we're doing my vertical spread class. I mean my technical analysis class. But we will be doing some options trading classes coming up here. Just go to affinitytrading.com and look at their schedule. I'll give you guys a heads up. But if you're interested in learning to trade the way I trade, we will be offering classes through here. There will be a class coming up here for February on spread trading. Okay. You can see here's my weekly coaching, and here's my evening technical analysis class that we've been doing this week and next week. But if you're not understanding what I'm saying about verticals, if you need more of an explanation, that's when we'll teach it. What week is the Priceline trade? Well, I would be looking to trade Priceline. Let me take a look at the chart. Earnings aren't really in the way for the next couple of weeks. I'd be willing to trade Priceline pretty much through February. Maybe the weekly. Or that would be good. A nice 22 days of time decay, even the February monthly. But we can come out here at the 1180 and sell this vertical. Not that one. That's ugly. The pricing isn't very good on that, though. I don't like that at all. So this weekly pricing looks very miserable. Okay. See how the split between the bid and the ask is so wide? Let me show you that again. See that 1490 by 1660? I do also have my stuff on a delay, so that way I don't kill the bandwidth. So it's not moving as fast. Versus I can even go down to the 1175 vertical, 1175, 1170, and get a really nice, I get a much better split. All right, so I'm going to just do this once. I'm just going to get this filled just once. All right. Right click, cancel replace order. I want you to see what I've got here. I've got one order, just got filled. I am risking $320, folks. So think about that. This is a $1,200 stock that I'm risking $300, $320 on. Okay? And all I need this stock to do is stay above 1175. That's 30 points almost away from where it is right now. Okay? Get back into some of these stocks in the watch list here. Can I repeat the trade? Yes. I am selling a vertical spread for February, and it is right here. It's the here's the filled order. I sold the 1175, 1170 vertical spread. Yeah, I just did one contract. That's 300, because I want to show people you can do this with a small amount of money. That's $320 of risk. If I'm wrong, I'm going to lose $320, okay? So let's take a look here at some other stocks that I think are really looking good. Amazon is kind of in this little quagmire. It can be looking sideways to bullish. So we do have a sideways trending trade on here that we just took off. But again, earnings are coming out. So on my watch list, you'll see where I put an asterisk right next to Amazon, to be possibly going both, bullish to sideways. Could you be assigned, Bogdan? No, because you sold an option and you bought an option. Okay, so yes, they will assign you, but no, you're not going to have to keep it because you have the other option. The sold option they're going to assign you on. The bought option you have the right to exercise and get yourself out of the trade. Okay, so that's an insurance policy, Bogdan. This is an insurance policy. Right here, this price line, this 170 put, okay, will cover that 175. All right, so you will be fine. Look at the margin it's holding right here, folks. $500. It's holding $500 on my account. That's it. Okay. And again, if you need more, let me educate you better by taking a class on it. All right, that's what the classes are for. BIIB is doing really well. Earnings are coming out though, so I hate getting into things this close to earnings, especially when it's just a few days left. But BIIB is doing well. MDY earnings are not in the way of this sucker. This one looks really nice. It's down with the market today, but the mid cap 400, this is looking really good. Okay, I'm not going to get into it today. Tesla, I'm thinking, is also making a nice little recovery. Definitely could see this thing getting up to 195 because that's its resistance area. Earnings are not in the way of that one either. UNP gapped up. Earnings are now out of the way. But again, this watch list was generated earlier in the week. Please don't get in today on something like UMP. Let's see if we get a bit of a pullback or a resistance break. Okay, get the pullback, support, bounce, or the resistance break, but don't jump in. So even if the 1175 goes in the money, you're not assigned because you have the bought one. Yes, they will try to assign you, Bogdan, but you call up your broker and tell them to exercise your other option, and then you're out of the trade. That's why. So when they go to exercise you and they try to put the shares into your account, and you don't have enough money, let's say if you have a small account, then you can basically exercise that other option and get out of the whole thing. Absolutely. Boeing doing really well as well. So some of these stocks, hold on to the watch list until after earnings. I'd like to get into Boeing after earnings as well. Is it PCUC? I think that's right. No. What the heck was I looking at with PCUC? You see something here. I think I messed that up. PCYC. PCYC. I really would have liked to see today stay above the support line, but pay attention to PCYC. See if it does get above the support line, and you might get a good opportunity for a push higher. All right? Not something I even want to entertain putting the order in for right now. So our watch list this week is really a lot of, watching. Amgen is another one. Because earnings are right there, be disciplined, folks. There are sometimes, floor is looking really nice. We had this nice, beautiful breakout of resistance. It has a spinning top, and now we're getting a big downward day today. Let's see if we get that support bounce. All right, PPH. Let's see if we do get something that we can put a trade on. Would be nice. PPH. Why is this not giving me the full chart? It's frustrating. Sometimes this, I don't know why this does this. Let me go to PPH here. Here's PPH. Nice bull flag. Okay, pharmaceuticals looking really nice. Could get a nice run here. All right. So I'm really excited with the way the PPH looks. So that means either you can trade the PPH itself or the stocks that track the PPH because it's a pharmaceutical ETF. But that one's the most price line. That PPH is the one that's the closest one to placing it, triggering an order. IYT, another ETF, looking really nice. Transportation's looking really good here. GILD is what we're in. Okay. Earnings are coming up here in a little bit, so we will have to get out of this pretty soon, but there is room if you wanted to take a short-term trade on a support bounce today. Yeah, volume, PPH has very limited volume. That's why I was saying, Michael, look at the stocks that track that ETF. GMCR, Green Mountain Coffee Roasters. Again, darn it, earnings coming out again, but you can see a nice bull flag break here. Okay, really nice classical break, good entry today. Don't know if you want to be in the trade for a few weeks though. All right, you can. You got a nice little move here of about $6-7, so another $5 of that move still to happen. But they have already started to increase the volatility of these options. So I might just stay away from it altogether because the volatility has already been pushed in. Maybe last week would have been a better time to get into that. I'm okay with increased volatility because I'm buying an option, but it doesn't really look, I don't want to get stuck in it. Okay. My downward trending Chipotle Mexican Grill, CMG, nice little breakdown. Again, earnings coming up, but I'll be looking to buy puts there. Goldman Sachs, earnings are out of the way. All right. An entry would be below 170. Not a really good technical setup, so I really won't take them unless I get good technical setups. BIDU. That was already a bear break that happened right there. Okay. And it gapped. So unfortunately, I would be staying out of this for right now. If I didn't have an order already in, I'm not going to get in now. Because now it gapped down. You would have gotten in here at about 170, and it's now already down to 162. So if you got filled, if you put in an order here, folks, to get filled, on the break of 172, you got filled down here at the open. Let me show you the way you would have gotten filled. So you would have gotten filled at the open right up here. Okay? And so it's been sliding all day. So, you would have been able to get into this trade this morning if you had a buy stop order. The opening price was 168. So let's say you got in at 166. You'd still be at 162 here doing okay. All right. CMI. Here's that bear flag from beginning in the week. It's made most of the move already. So, if you weren't in, then stay out for a while. Let's see if it resets. Costco. Love Costco. We can see this symmetrical wedge. and then it broke. All right, so again, we've already got our move. Some of these folks, I apologize, they've moved a little bit, so or earnings are just causing us to stay away. But remember one thing, that four-letter word, cash, is a position. Okay, so here's Monsanto. Here's your break, right? So there is your break. It's also setting up in a longer-term pattern. So let me show you that as well. There's your bear flag break, but you had a kind of a broken shoulder here, but that's a head and shoulder pattern. And then the break of this neckline here, so to speak. Like that. Would have been a nice entry even towards the end of the day yesterday, but the move was from 117 down to 111 on this. That's $6. So that's already been too much of a move. All these stocks that you gave us are on your watch list. You got them from your Corey. I got these from the weekly options, the stocks that have weekly options, and the ETF list. Oh, I would love JCat to buy a put, but I think it's moved already. If the entry was to get in over here on the bear flag or get in here on the head and shoulders, now you're looking for a $6 move or $6 move, and it already went from 112 to 108, right? So when you're thinking 112 minus $6 is 106, and so that would be my concern. However, what I can, yep, there you go, Rick. You must be thinking what I'm thinking. I can look at Monsanto with a vertical, and if it does bounce back up, okay, it's I can be above this 114 area, but there really is not a lot of premium built up in this. So even though I would be thinking of doing a spread, even if I go out to February, the 110, 115 is the best one, and 110 is a little too close. 110 is here. So if I get any good, decent, retracement before it pushes itself back down, I could get hurt on that. And there's really, the 117 premium is nice, but I want to see that 117 premium one strike higher. Okay, this is too low of a probability for me. I'm going to bet this 110, 115 has got a probability of me being right, probably about 35%. So let's check that. Let's see how close I am. Maybe even 30%. Let's analyze a duplicate trade. Set slices. Let's go to, what is this? This is for Feb. Set slices to break even. Oh, my apologies. It's not 40%. It's the inverse of that because I'm selling it. Geez, I've been such in a buyer's mode, folks. When I have a 0.4 that I'm selling, that gives me a 60% probability of being right. So it's not as bad as I thought. My apologies. Geez, you get so focused so much on, the way you've been trading. I'm going to be selling the option, so it's it would be a negative number. So that negative 40 means I've got about a 67% probability. That's pretty good. I like that probability. Okay, I like trades that I can get a 67% probability and collect $1, but I want to set the slice to the chart. Why do I right-click rather than the spread tab? It's just convenience. I know I've got my pen in my left hand, and I just can do everything with my right hand. So yeah, it's just easier for me. I'm a big using the mouse to kind of do whatever I can. And then I'll control click things and build them myself. I like to customize. But yeah, so anyway, folks, I like this probability. But here's the problem. Setting slice to the chart, there's my break even. Okay? And that's just too close for me. All right? It's a little too close for comfort. If the break even was even above this ascending line, I'd be a little more apt to say, yeah, this looks good. But Monsanto already moved too much for me to buy puts. I'm expecting a $6 move. It already made $4 of the dollars. I'd love to buy the vertical, but the vertical I want to buy isn't giving me enough premium, which means I have to sacrifice what I'm looking for and take a different strike. I want to sell the 115, 120, but it's not giving me what I want. So now I'm going to have to try to settle for a 110, 115, which gives me the probability I want. It's close to the premium that I want, but it's below an area of resistance that this thing might hit. There is just to give you an idea, let's see, let me go probability of touching. Let me change one of these from Theo Price to, where's probability of touching? Probability of touching. Okay, so there is a probability of touching. There's a 77% chance that this stock is going to touch 110, which means that, what if that 77% probability happens the week that I'm trying to get out of this thing? Yep, Rick, that's a great thing. I'm just going to share that with everybody because, yeah, absolutely, I agree with you. It's important to be disciplined. So if it doesn't fit rules, we say no. That's right. Exactly. So I'm just going through my progression out loud, what's going on in my head, so you guys can hear why. Because you might ask, well, why aren't you going to take that trade? So I'm just going through the progression in my head of why I don't get into a trade like that. I have certain criteria. Each one of those criteria weren't met. Okay, I wanted the 115, 120 strike. I'm willing to go down to the 110. It's close to what I want, but then boom, I see that it's not going to fit where I want to be on the chart. So don't even bother. Setting slices on the chart. So the setting slices on the Analyze tab is telling me certain criteria. Like with this vertical spread, if I set it to my break-even price, this will tell me my probabilities that this stock will be below my break-even, Paul. So good question. It also will tell me, let's say if I want to know what's the probabilities or what are the, what would happen if this stock makes a 10% up or down move, right? And if this makes a 10% up or down move, here are the prices that 10% up or down from 108 is, 10% above 108, 10% below 108, and then what I would expect to happen if this does, okay? So if I look at this, Paul, or everybody else out there, why I like looking at the Analyze tab, if this thing drops 10%, I make money. If this goes up 10%, I lose money, okay? If this thing, I don't want to add slice, let me reset. If this thing goes up, let's look at the $5, $2 up or down. If this goes up $5, I lose. Up $2, I lose. Stays sideways, I'm making or breaking even. Down $2, I'm making a little bit of money. Down $5, I'm making money. So I use the Analyze tab to help me with my probabilities. Okay. Let's go. So let me just continue a little bit. I hope that helped. Yeah, when I'm looking at the chart, but then I'm also looking at the Analyze tab by itself. So the Analyze tab is completely separate. Let me just kind of see if I can run through Monsanto. That's my kind of progression. UPS. I'm trying to give you guys an insight to what's going on inside my head besides cobwebs. UPS is another one that's really dropping nicely. You can see that there was a nice entry back here, a nice entry over here. Now we're getting too close to the earnings to be involved in it. Humana. This is a nice bear flag. Okay, but we have earnings coming out. So even though I really do like this flag right here, let me see here. When is the earnings? 2.5. If this does break, folks, I'm willing to get into Humana for a few days, but volatility is not bad. So if this does break down, Humana looks like a really nice, relatively cheap trade. Look at this. A February option is going to cost you $1.60. All right. I mean, seriously, really? I mean, that's not even expensive at all to hold it for a week. So I'm going to get into this a little bit premature, guys. I would want to get into this if it dropped a little bit more. Let's set it up now so I can show you getting into a put. But I just want to preface, please, guys, remember, I want you to get in a little bit below this line. But I want you guys to see what happens with volatility over the next couple of days and over the next week. Don't get into this trade, please. It's not a recommendation to buy or sell. My entry would be a little bit lower than this line right here. It would be just below the low of the day, which the low of the day is 95.80. We're not very far off from that, okay? But I just want to preface it so if someone comes back next week and say, well, you lost on this trade, I wanted to show you if we do lose and volatility picks up, what happens. Is that okay? I want to just kind of, this is a paper account. I use it to make money so that way, people can see that I am good at what I do, but it's also a learning vehicle. So I also have to combat when I do things like this and show people, hey, this is what really happens in the real world. If this does go against us a little bit, not that I want it to, but we're going to get an increase in volatility. And that increase in volatility, even though we might be a little bit wrong, might kind of save our bacon. All right? But just preface this again. My entry is a little bit lower than we're at. My entry is really down here at just below the low of the day. Okay, the low of the day is 95.80. In fact, I'll put it here, right here in a text. Where's my text? Text note right here. ENTER on a break below 95, and I'll put 75. Just give me a few points. Few. That's where I want to get in. But I do want to show you guys a put trade that's very cheap. Okay, I'll take the 95. All right, because it's a 15-cent wide. It's close to the at the money. It's a $200 trade. I'm going to do this twice because I'll risk all of. Check this out, folks. I'm risking on a $95, $96 stock. I am risking $500. Got that filled. And then let's see what happens with the volatility, all right? RTH is another one that's dropping pretty nicely here. I really did, like the fact that this broke out of this area of support at 59. We did get a bit of a gap down, so let's see if we get a little bit of a support bounce. But RTH is really ripe. McDonald's, after this earnings, was it today earnings? Yeah, earnings were today, and you can see that it's still looking very bearish, even though it's, so McDonald's might look for a nice little bearish trade, even though it's up today. Oxy, nice candle here on the push down. Again, earnings are out of the, going to cause a little bit of a problem. When I was looking at this, over the weekend, I was seeing kind of this and thinking, all right, if we break down below 90, which we did, okay, but now it's too close to get in. I mean, it's next week, so I really have, and I have a weekend in between. So, um, you know, like it was mentioned before by, I think it was Rick, to stay disciplined. That's why I am where I'm at, because of discipline. Tiffany's, here's your bear flag. Oops, your bear flag right here. And then it just continued. Right now, we're really close to that gap. All right, so I'm really intrigued to see if this is going to, drop to 80 or 81. All right, so there is a good entry here on Tiffany's. With the anticipation that it's going to get down to trend line right here. Do you mostly do credit spreads or directional? Jason, I love to do credit spreads and time decay positions, but the market has just been so one-sided that I've been doing all directional buys of calls and puts because the premium was so stinking cheap. And here's another opportunity where Tiffany's, I'd be looking to do a vertical, but I'm not getting good premium, and it's very cheap to buy the put. And I think there's a good possibility to get a $4 move on this sucker. So if we did get a $4 move on this, -4 over the next 2 weeks, by the end of the month, my 87.50 is going to go from $3 to almost $6. Okay, so that's about $3 of profit, and that's a 1-to-1 if I was willing to risk it all, right? I'm risking $3 to make about $3, but in reality, I'd have a stop loss that's at least 50% of that. So let's just queue up 5 of these suckers and buy some puts. All right, and then I just got to put a stop loss in place on that, and that stop is going to be above about 87. Okay, so in reality, if this thing goes up $1.30, okay, I am risking. Just to give you an idea, folks, I am risking $1, barring any gap, to make 3. That's a 3-to-1 reward to risk ratio. I'm going to put my stop loss above. That's 87.10. Okay, so let me go over here and Tiffany's, right click, create a closing order. I'm going to sneeze. Hold on. Excuse me. Good till canceled. I'm not going to get it filled, which is fine. It's a stop anyway. Market. Stop loss, I mean. Get me out when this stock gets at or above 87.10. Sorry I went a little quick. I was trying to get these things filled. That was the close of the day. Let me just get that in there. Thank you, Bill. So I've got my stop loss in place on Tiffany's, okay? So in a nutshell, folks, I've put in some bearish trades. My overall account here, this account, is effectively a delta of 2 or almost 3, and I have a negative theta of about 38. So that's telling me that I'm beta weighted to the spiders. I'm effectively short almost 3 shares of the spiders. So would you agree that I am very, very neutral? Okay, so I'm basically short, about $1.77. I mean, $1.77 shares of the spider. So effectively, if you bought 2 shares of the spider, you'd be more bearish than me. Isn't that funny? So the market has been down. Are there any other questions? Anything I say illogical, sounds silly, you didn't get, let me know. I'll stay here for a few minutes to answer some questions. The kids are at Grandma and Grandpa's. Dropped them off this morning. Not this morning. Dropped them off at like noon. Got the truck washed and filled the fireplace. Did some trades. Any questions, folks? If you guys do want to get involved, please, sign up. If you're an affinity trading guy, if you're from Affinity, all you need to do is just go right here to Affinity's website, click on the coaching link right here, okay, and get yourself in. It's $99, but there is a discount, all right? It's $79, okay? So if you're already here, you can definitely pop into that. Could not get what the risk for the vertical? Oh, okay. So if you get assigned on a vertical spread, Bogdan, you have that other option that you can exercise to get you out of it. So just think of any number whatsoever. Okay, let's pretend it's a pretend trade. Let's use two numbers. What's the difference between 50 and 45? Though there is risk, the difference between 50 and 45 is $5. You have a maximum of $5 of risk in that trade. You have a maximum of $5 in risk in the vertical spread we did. Okay, so you can only lose $500, but you were paid a credit. So you only can lose the $500 minus the credit you brought in. We brought in a credit. The credit was $180. So we can't lose anything more than the difference between 500 and 180. Exactly. All right. So if you guys, I really appreciate you all being here. We had a really nice attendance today. If there are some people that need to pop in, look, if you're from Affinity, then use your login and go right here and get yourself. If not, you can use my PayPal account. This will be recorded, Greg, and part of being in my coaching is you get the recordings, you get the weekly watch list, you get the email support, so I will respond to your emails and answer your questions. That's kind of what I do. So, if I can help with your trading, I would be very happy to do so. I will get that, darn it, where is it? Trader subscription right here. Copy. Oh, you're absolutely all welcome, guys. Please, I know some people have been on their trial for a couple of weeks now, and I know they said they needed an extra week to make a decision. So, I put the link in. Please get yourself signed up. If you're from Affinity, just sign up here. If you're not, go to my PayPal and take care of it. I really appreciate that. As long as I keep doing this. Bogdan, so your only risk is the spread. Your risk is you can get assigned, but you have the other option. You have the other option to exercise against that. And Bogdan, if you're still really concerned, Mike and I are going to be putting a class together for next month on trading verticals. Okay, and then the month after is trading credit, or we don't know if we can do credit spreads or calendars diagonals. I got to figure that one out. And there's a discount as well for classes of people who are part of the coaching community. Okay, this is recorded. I will be getting it out to everyone that signed up on the coaching side. So please listen to it. Tell me what you think. Give me your feedback, and I would love to have you all. Not next week, Bill. I'm going to do February. Right now I'm in my technical analysis class. I'm doing a credit spreads probably in February, and then verticals in March, or verticals in March, verticals in February, and credit spreads in March. Verticals and calendars and diagonals. Okay, 2 different classes, calendars, diagonals, and verticals. One's going to be February, one's going to be March. Right now, we're finishing up my technical analysis, which if you want, you can also get the recording if anyone's interested in getting the recording of the technical analysis class. Next week, you know what we're doing next week, folks? Next week in my technical analysis class, we're spending a full session just on price setups, using bull flags, using head and shoulders, all of the price patterns. Just next Tuesday. That alone is worth the price of the class. All right, I think I got all the questions. Did I miss anybody's? I don't think so. I think I got everybody's. Love to have you, Barty. Sign yourself up. Love to have you in the session. I think it's worth it. I mean, you know, you're getting, oh, Barry. Okay, it keeps coming up B-A-R-T-Y. So it is pronounced Barry. I apologize. You know, I think it's worth it. You know, you're going to get oh, okay, gotcha. You know, you get my email support. And, you know, you get the watch list as well as coming in hear me talk once a week. Oh, my email address? Yeah, let me put it right back to you. Actually, I can just put it up right here. There we go. Okay. Either one will get to me, Ralph at Omegatrades or Ralph at Affinity Trading. I get them both. Okay. I'm the options instructor for Affinity. I love working with them. No problem. You got it, Barry? You got my email right there? Awesome. All right, folks. I think that was the last of everything I had to answer. Nothing else has come in. I think I got everything I needed to. Like I said, I will get everybody any updates to classes that we're doing on the Affinity website. Check their list of all the stuff they offer. They have a tremendous amount of stuff in here, from gap trading, day trading. Have a good weekend, and I will see you all next week. The recording will go out tonight, probably within a couple of hours, okay? Hey, Randy, good to see you, buddy. Sorry I couldn't see you on Saturday. Just got jammed up with the kids. All right, folks, have a great day. See you next week. Thank you again.